What would you do with an extra $142,098 over the next 30 years? That's a question that I asked one of my former clients yesterday. Here's the thing. My name's Kevin Retcher. I'm the owner of First Meridian Mortgage. If you're new to my channel, I'm a mortgage broker licensed in Virginia, Maryland, and DC. My claim to fame is I've never missed a closing date in my career. I've been ranked in the top 200 loan officers in the nation by volume multiple times. Top 100 veteran loan officer almost every year for the last 15 years. So I always say I'm the best kept secret in Northern Virginia. Don't keep me a secret. But let's get into some math, right? So I had a client and she did a loan in December of 2024. So 10 months ago, she's made 10 payments. Her original loan balance started at $655,430. Okay, and she's made 10 payments. Her current balance right now is $650,418. I called her up and said, "Hey, I can do a no-cost refinance for you and get you a 6.5 interest rate, and it pays 0.919 credit toward your closing costs." So the lender is going to pay her money at 6.5%. So that is 3/8 lower interest rate than she's currently paying. So I tried to educate her on the actual savings. So if you take the current payment she's paying, $43.06, versus what the new payment would be, which is $41.14, she would save $191 per month. But here's the thing. A lot of people don't know how mortgage amortization works. You actually get about 80% of the savings in the payment, and you get about 20% in additional principal pay down with a lower interest rate loan. So if you were to compare these two loans, the very first payment, she saves an additional $37.50 going to principal every month, first payment versus first payment. So here's the thing. You're really getting the 37 plus the 191 extra. If you make this payment to principal and you pay the same exact amount you are willing to pay that you started this loan 10 months ago, you would pay this loan off in 317 payments. That's right. You're getting a no-cost refi, saving 33 mortgage payments. 33 times the $43.06 that you're paying equates to $142,098. This is paramount to understand, that you want to take those opportunities when you have them. Interest rates are very volatile. They can give you this opportunity today and take it away tomorrow. So when you have the opportunity, snag it. And here's the benefit, right? You can do this every 6 months. Nothing stops you. So in theory, you could do this twice if interest rates continue to go down. Here's the thing. The best part about this program, that closing costs are paid for. So you don't have to ask, "Kevin, do you think interest rates are going to go lower? Should I wait?" You don't have any cost to recoup. So there's no reason to wait. The only time that you might wait is if you're paying the closing costs to try to get a lower rate. But here's the thing. Do you know exactly what interest rates are going to do? If you pay those closing costs, in this case, to get 6.25 versus the 6.5 to get that slightly lower rate, and you pay that $5,800 in closing costs, you're going to be really mad if I call you in 6 months and say, "Look, I can actually get you 6 now, or 5.75 at no cost again." Here's the thing. Every time that I call someone to do a no-cost refi, I'm putting money in their pocket over 30 years. Think of how many times that some people do this. I had one client do no-cost refi 13 times. And this is the thing. Every single time he saved money and he didn't pay any closing cost. So here's the thing. Make sure you take these opportunities when you have them. I want to talk about a program to help you buy a home. If you're one of those individuals out there that says interest rates have been too high, the inventories are too low, the prices have been too high, I have some good news for you. It's becoming a buyer's market. One, interest rates have come down. Two, inventories are up. And three, about 40% of the homes are actually selling below list price right now. So let's get into some numbers and let's get you into a home. One of the most important things to consider when buying a house is your down payment. And I have some programs that are based off of income that can help you with your down payment. Give you some free money. Isn't that cool? Here's the criteria. You need to have an income under $129,600. You need to be a first-time home buyer or only be on one other mortgage or loan. So you don't have to be a first-time home buyer for this. You have to put 3% down only. You have to do a home buyer's education class if you're a first-time home buyer. It takes about 20 minutes to an hour. It's free. And it's a max credit of up to 2%, max $350,000. So you get $7,000 toward your down payment, closing costs, or prepaids. That is free money, does not have to be paid back. Here's the thing, if you have leftover college money, plus the $7,000, any gifts from parents for down payment or closing costs, and or the seller can actually give you a credit of up to 3% of the purchase price toward closing costs. The $7,000 can actually go toward down payment. So on a $500,000 house, 3% down would be $15,000, right? Minus $7,000 credit, you could get in this house for $8,000 if either your parents or the sellers paid the closing costs and prepaids for you. Literally, you could buy a $500,000 house with $8,000. That's pretty exciting. That busts all the theories of interest rates are too high, cost of the home is too much, I can't afford the down payment. This program is helping a lot of people get into homes. If you want to know more about it, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage. Never missed a closing date in my life. I always say I'm the best kept secret in Northern Virginia. Don't keep me a secret. Give me a call, 703-799-5626. You can visit www.firstmeridianmortgage.com. You can make an online appointment right there if you'd like. Talk to you soon.